All right. Hi guys, I hope you're well and you're all ready for our technical analysis classes. So in this first section, we're going to be talking about direction, how to spot the direction that the market is going. And there are two main things that we use to spot direction. One of them is what we call trends. We basically use trends to spot direction, and then we also make use of something we call structure, right? So in the first part of this directional bias section, we're going to be talking about trends, all right? And then later on, we'll talk about structure. Structure is probably our key method of determining direction to trade, but we also use trends as a way of confluence and supporting our decision that we would have found from structure. All right. So without any further waste of time, let's talk about the first part of trends, which is trend basics. Okay. So one may ask the simple question: what are trends? Basically, to make it easy for you to remember, let's actually say a trend is the direction that the market follows, let's say at a particular time. Okay, it's that simple. The trend is the direction that a series of candles on a candlestick chart is following. All right. It can't get any more complicated than that. So whenever you open a candlestick chart and you see that the candles are going up, what you see is what you get. That's the trend. It's an uptrend, right? And the opposite is also true. If you see candles going down, you're in a downtrend. So we only have three directions that the market can go. The market can either go up, the market can go down, or the market can go sideways. These are the basic directions that you can expect the market to go. So whenever you've got price moving up, we call that an uptrend. Whenever you've got price moving down, we call that a downtrend. Whenever we have price moving sideways, we can call that a range. All right. And you can also call this a bullish trend, like we've already discussed. You can call this a bearish trend, and you can also call this a consolidation. That's what others prefer to call it. I just use the word range. I don't fully understand the consolidation word, but it is what it is. I think you get it. So one may ask, why are trends important? One may ask why trends are important. Well, what you need to understand is this. Remember, we make money. Let's say the market is going up, right? Because we don't have an inexhaustible amount of funds in our trading accounts, whenever we see that the market is going up, we'd rather go up with the market, because if we try to go against what the market is doing, chances are our accounts are going to get stopped out and we're going to lose our capital. And as a trader, it's very important to preserve your capital. So you don't want to be trying to be going down, and fighting the market, because there's a saying, I hope I don't forget this or chop it or say it the wrong way, but there's a saying in trading that says the market can be wrong longer than your account can be right, or something like that. I'm not sure what the exact term is, but it's basically used to illustrate that the market is never wrong, right? That's the first part. The market is never wrong. But even if it were to be wrong, right, and you so happened to be on the correct side, it can be wrong for so long that your capital cannot withstand how wrong it is. Okay, so what it simply means, if you're trying to move down here and the market is moving up, it's going to trigger your trade, stop you out, keep on going. If you try to hold the trade and not close it, you're going to lose a lot of money on the way. So it's important for us to know where the trend is going, because it makes it easier to make money. It's that simple. It makes it easier to make money by simply going where the market is going, right? So let's talk a bit about the market going up, going down, and sideways. So when we have what we call it an uptrend, the market really ever just goes up in a straight line, like pow. It normally assumes some sort of ebb and flow, or you may want to call it a wave approach to its movement, right? Generally, when the market is moving up, you're going to see that it will move in a way that's that's a bit more unpredictable, which is what makes trading a little difficult. You can see that the market is going up, but in terms of how it moves up, it's got such a wavy nature to it. You need to be able to anticipate, or to deal rather, with the direction changes that happen at each point in the move of the market upwards, right? So, like I've already indicated, whenever we have the market going up like this, we call it what? A uptrend, or we call it a bullish market, right? And then we also have the opposite scenario where we may have price moving down in a wave fashion like that. And this over here is what we can call um, a downtrend. Let's do that, downtrend, or we can call that a bearish market, okay, like that. So these are the two common the two more popular trends that I talked about. And then obviously we have the last popular trend, which is called a range. A range simply is a sideways movement that can have more or less equal highs over here and equal lows, more or less. It doesn't have to be exactly accurate as you see here, but for you to get the picture, I have to draw it that way. All right, so this is what you call a range. So these are the basic directions that the market moves in. All right, now whenever we are in the market and we're trying to identify where the market is going, sometimes it's not as easy to just look at a market and tell that the market is going up. Okay, normally we try and use different drawing tools to identify where the market is going. So enter what we call the trend line. So a trend line is simply a line that's connecting, I like to use yellow here. It's simply a line that's connecting the major peak points, and we'll talk about the actual market term for these peak points, but it's just a line that connects these peak points over here to one another. Okay, if it's below, this is your bottom trend line. Others like to call it their support trend lines, and others like to call these top ones the resistant trend line. Sorry, excuse me. And this is in a scenario where the market is bullish. And in a scenario where the market is bearish, such as this scenario here, to make it ideal, we can do that. It's not always going to be this perfect, guys, and you're going to see that. So in a market like this one, you can call this your resistance trend line and your support trend line. The reason why this is called the resistance trend line is because price is resisting to go higher each time it contacts the trend line. And whenever price reaches this bottom trend line here, it's supported to move higher. Okay, and the same is true over here. You can call this your support trend line. Actually, let's label that support trend line over there. And you also have what you call your resistance trend line, okay, which is your top one here. All right, the same applies over there, and the same applies over here. Okay, so obviously in a range you would also be able to label more or less in that way. So let's take this up here a bit. So this here would be our support trend line, and then this would be our resistance trend line. All right, so I'm sure you get the picture now of what exactly is taking place over here. So these are the basic terms that we use in terms of understanding trends and using an instrument called a trend line to identify the trend, especially in situations where it may be a little difficult to tell where the market is going. I know right now you may be saying, but it looks so easy to tell where the market is going, but it's not always easy, particularly if you're a beginner. You may find scenarios where it looks like the price is moving sideways, the price is moving up, the price is moving down, and you don't know which part of price to actually look at. You know, sometimes, let's say for instance, price is moving up like this, and just as it reaches this top part, it begins to move down like that. Now the question then becomes, if you're coming into the market and you're seeing price at this level over there, the question then becomes, do you start to trade downwards because you've seen this going down? Or do you trade upwards because you've seen this entire structure going up? Do you wait for price to come down and then continue up? Or do you go down with it and go up with it? Or do you have reason to believe it might not continue going up? So all these questions are the kind of questions that you start to see people questioning when they look at the market, whenever they come into the market, because it's not that easy to spot, right? So let's talk a little bit about how to draw trend lines, because there can be a little confusion as to how to draw trend lines. Many people use many different methodologies, and what I would advise is for you to incorporate some of my rules. But the one thing that I can tell you is, if you're going to learn to draw anything on a chart, it looks like you're simply drawing lines, but you need to practice drawing them, because your mind has to be able to do it so effortlessly and see the right points to draw trend lines. If you draw the lines incorrectly, you're going to be making wrong decisions. And honestly, if you're wrong about something like direction, you're going to be wrong about everything else. Your entry is going to be at the wrong points, and it's probably going to be going against the trend, because your analysis about the trend will be what? Will be wrong. So you don't want to be in that situation, okay? So let's find more space here and put up some rules, okay? So again, like we said, we use trend lines simply as a way of telling the direction that the market is going, right? And as we've already indicated, we do that by connecting peak points or major trend points to one another, okay? These points need to be the obvious ones. There's going to be points in here that are going to look like other points, right, within this move up, but you want to be able to use the major points. And remember, you're not going to be able to know that this is a major point until price has already moved down. That's when you're going to know that this is a major turning point which I can connect a trend line to. But we're not using it as an entry point. Remember, we're just using it as a way of telling that the direction is still going down. Okay. So number one, in terms of our rules, let's do that. Trend line drawing advice, right? Let's do that. Okay, one, you need to connect the most obvious points. Okay, you need to connect the most obvious points. You can't be trying to connect points that and trying to draw something that doesn't look clear to you. The lows simply need to be something that's standing out. If trading was the same point, all you had was this line, this would be the simplest point to draw, because you can it's clear as day. This is the lowest point, this is the lowest point, this is the lowest point. So you simply draw a line connecting the obvious parts. Don't try and then use another point that's somewhere in here, which is not a major swing point, because all that's going to do for you is going to make your charts choppy. It's going to make your charts rather dirty, and it may lead you to interpreting what's happening in the market wrong. Okay, so connect your most obvious points. Don't try and force anything. Okay. Second, right, you need to draw a line that connects as many points as possible, right? And in brackets, you only need a minimum of 2 points. Okay, now with this one, what you need to understand is it's more advisable to draw a line that connects many points. Chances are that's a valid line, and it's going to be the clearest way of telling where the market is going. If you try to draw a trend line, obviously you can't draw a line that just connects 1 point. There's nothing like that. But if you have 2 major points as a minimum that you can use, it makes it easy for you to tell where the market is going. Okay, it makes it easy. When you have even more points to connect with those 2 points, what that simply tells you is that that line is more valid. It's highly likely to be correct when you have more points that are connecting to that line. Okay, so you need to try and draw a line that connects as many points as possible. But if you can't find many points and you can only find 2, that's perfectly fine as well. All right. It's perfectly fine. And then the third point, which is very important, is consider connecting your most recent points. Okay, when we talk about the most recent points, what we're saying is, as the market is forming, or rather, let me draw another example here of a bullish market. As the market is forming like this, right? Let's say this move is not yet complete. Price is still going down. We obviously do not have a trend line to attach, or maybe let's assume we did have a trend line. Price had already moved down to this point, and then it moved up. These are the most recent points at the top here. Okay, so you draw your trend line like that. Okay, and then you connect your most recent points like that, right? And then what may happen is, as price is moving down, it may then come here, do this, do that, do this, and do that. Now all of a sudden, what you realize is this trend line now contacts 2 points, yes, but it's not exactly contacting these points, which are the more recent points that inform you more about what's happening in the market. So what you need to do now is what we call trend line evolution, which is you need to adjust your line so that you can connect the most recent points of the trend. Okay, like this. It's that simple, right? You try and connect the most recent points, you move this trend line again, you realize, okay, fine, I need to connect this point, I need to connect this point. I hope that's clear enough for everyone. We are not yet considering this point. Why? Because price hasn't yet moved away from this area to inform us that it's going to go down. So there's no reason to try and incorporate this point because it may blow straight through. Remember, the market is not bound by a line. It's not bound by a line. You can't stop the market by putting a line in front of it. We're just trying to anticipate what's going to happen. So if it so happens that yes, price then comes in and for whatever reason respects this line and starts to move lower, then we can say, let's try and connect as many points. We can cut a little bit of price action here because the points are relatively connectable. And we just do that if connectable is a word, by the way. If they're easy to connect in this fashion, and that would be what would be looking for. It shows that this trend line has got a lot more validity now, and we've evolved from having these 2 points. So consider connecting your most recent points and evolve your trend lines. All right, evolve your trend lines. 4, you need to be able to connect what you see. This is something that I can't stress enough. So do not force trend lines. Let's say connect what you see, not what you want to see. Okay, extremely important, this one. Make it easy for yourself to spot the direction by connecting the points that are obvious. Sometimes trend lines are not going to be neat. This is a very neat illustration of what you could call a rising channel. Okay, very neat. The lines look almost parallel, but that's not what you always have. Sometimes you're going to have a very disgusting situation like this one, where the lines could be moving in totally different directions, like that. Very possible to see something like this. And it's not always going to be pretty. You're going to try and connect these 3 points at the top. Now they don't connect anymore. You realize, okay, fine, I need to evolve the line, do that. And it is what it is. Don't try to force it to make it neat. Don't try to force it to make it a pattern that you saw in on one of my slides. Maybe you want to make it a channel. Maybe you want to make it a symmetrical triangle for whatever reason. Just don't do that. Don't do that, because it will complicate your trading. Remember, all you're trying to see is the direction. So it shouldn't be something that's complicated. And eventually, with time, you're going to be able to spot this direction without the need of trend lines. Okay, it's trend lines we're just going to be using for beginners who may be in situations where they're going to struggle to spot the direction easily. Okay, so let's go to a chart and try some chart examples and see if we can spot the trends on a chart. All right. So this is a chart for Nasdaq, and this is price action that took place already. So sometimes you may see that it may be difficult to tell where the market is going. Let's look at this bit of price action over here, like that, right? Yes, the price was moving upwards. It was going up at this point over here, all this section, it was going up. But when it gets over here, you could easily get confused. What's happening? What's taking place? All right. And what you simply need to do is take your lines and draw and connect these points, and you're going to see what's happening. Okay. Now, all of a sudden, it's become clearer. When you see a line that's dropping like this, it means price is moving lower, and this one is moving a bit low. But you can see by the gradient of the line that it's not as low as you would normally expect, or rather, it's almost straight. Let's describe it that way. So you could actually say this is almost a range, like that. Remember, like I said, sometimes these ranges are not going to be picture perfect. They're not going to be picture perfect. But what you're going to learn to do is you're going to learn to draw them in a way that helps you to interpret where the market is going. Now already you can see that price moved in. Now you see that pattern. I hope you see it. It didn't reach the top this time. Did this? Reached the top, reached the bottom. And all of a sudden now you can see that this is almost a ranging market because you've got two lows that have got a relatively equal price and two highs that have got a relatively equal price. Now what's important for us to note, someone will say, in terms of this part, why did you cut the wick of the candle? Now, when we draw trend lines and connect these lines, what you should know is you shouldn't cut the bodies. Maybe let's add that to our earlier slide to say okay, I've clearly got a point. 5. Do not cut candle bodies. Sorry about that. Let's say cut candle bodies. Connect candle wicks. It's simple, guys. I think that's simple to note. So if you go back to our chart here, you can see if you try and cut candle bodies, you could end up drawing again things that you want to see and not what's necessarily happening. But if you need to make a point or to see how the market is moving, right, you can cut the wick, because what we're only trying to identify is, are the prices relatively similar? All right. If they are, which is the case over here, then we can say, all right, fine, price is moving what? Sideways. Over here, the same is true again. You can see that this wick over here, it does surpass this wick over there, but only marginally before the price closes at this price and continues to move up. So it shows you that because the market is not picture perfect, you could say these are relatively equal prices, and so are these are relatively equal prices as well. So as a trader, you need to be able to spot that, and that's going to help you to see that, okay, price is only moving sideways in this case. It's not really going anywhere. Okay, and then we see a picture where price starts to move down, right? So let's just clear out this chart so that we focus on the points where price is moving down. Okay, let's just box out an area. Say this is your new part. Okay, this is what's been taking place. You can see price is moving down. How are you going to draw this line? For me, what I would simply do is I'd look for the points that stick out to me. I need to connect as many points as possible. I'm allowed to cut the wicks, but not the bodies. So as long as I look for the most recent points that stick out to me, on the bottom part I can see these are the most recent points that stick out to me, right? And these are the most recent parts that stick out to me. One will say, why did I start from here and not from here? You know, it's because now I'm kind of used to it. I can see the points that connect with my eyes almost. It's not perfect, but just by using my eyes, I'm able to see that these points are connecting. This is not essentially what I would call a body cut, because over here what we have is two candles closing at the same price. So if you just go to a lower time frame, you're going to see that. Okay, it's not necessarily a body cut that's taking place. If I were to adjust, I'd simply do this to help you guys follow the rules, right? So now we have trend lines that are connecting 3 points, right? right? This is marginal, so it's fine. What you shouldn't be doing is slashing through like tons of price action. So over here, we've been able to connect 3 points. In terms of this box that we've boxed out, these are the most recent and major points that stick out to me. On the bottom, I've got this point over here and this point over here. They stick out to me. They're the obvious points. So now you kind of get an idea of how to draw a downtrend, how to draw trend lines on a downtrend. Now let's look for a scenario where we're drawing in an uptrend. Okay, we've done a range, we've done a downtrend, and we can consider a situation where it's easy to spot an uptrend. All right, so let's box out another area where price would have been forming. Let's box out this area over here before we got to the range, right? So you open a chart, and this is the price action that you see, and you say to yourself, where's the market going, right? If you can't find where the market is going, and you think you may have a problem with determining where the market is going, you can simply use the lines. For me, I see this point. Let me use my pen. I see this point as a major point. This point is a major point. This point is a major point. It sticks out to me more. I'd say this is a major point. This is a major point, and this is a major point. Now, what am I going to do? I'm going to try and connect my most recent points. Where are my most recent lows? This one. It connects over here, but if you extend the line, it also connects over there before you cut out tons of price action, right? Same applies over here. If you try and connect this wick to this body and do that, you can find that you've already connected major points. Now I'm not going to connect this last point over here because I'm now slashing through tons of price action, which shouldn't be the case. So what I'm going to simply do is I'm going to exclude that part and focus on the more recent parts, which seem to be connecting to price action. Okay, so now I can see it's now even clearer to me how price is moving. Price went up, came down, respected the line, moved up again, respected the line a number of times, moved down, respected this line, and moved up again. So in this case, it's a much easier situation for us to be able to identify where the market is going with the use of trend lines, right? And when we extend this trend line now, let's say our price action is now at this point, okay? And remember, we're saying at this point, this is where our range started. Now we get over here and we start to wonder, where's price going? We could say price is going down, we could say price is going sideways, but what we can simply do, remember, is to evolve the lines, all right? Like we said already, let's simply evolve the lines so that we're able to see where the market is going. If we evolve the line like so, now we're no longer considering what's been happening in these regions. Where's my pen? Sorry. In these regions. All of a sudden, we stop looking at this. We start looking at what's happening right now because our two recent points indicate that price is moving sideways. And it might not be a good time to look for buys or sells because the market is not trending or moving in one direction. It's easy to make money when price is moving in this direction because we know it's in our best interest to buy. It's easy to make money in this direction because we know it's in our best interest to sell. But when we try to go against the market and the market is moving down in this fashion, right? And what you do is you try to buy. You buy over here, price comes down, right? It comes lower and stops you out at your level where you bought. If you had not already closed your position, you get stopped out over here. You see, you try to buy at this point, you try to buy at this point. The market always seems to be forcing you out of a trade. Instead of simply doing something that the market is telling you, the market is telling you, if you want to make money easy, just sell. And if you can predict these turning points, which are your major turning points of the trend, then you're going to be making money because the market always moves lower when you do that. And it doesn't return where you entered. It just returns just a bit for a small retracement or pullback, and price moves down. Just a small pullback, price moves down, okay, until the trend changes again and starts to go up. So I hope that's been clear enough for you to see. And what I would encourage you to do is every time you open a chart, just go on a blank chart and open any time frame that you'd like. And when you get there, just practice by connecting the points that you can see. It's going to become easier with time when you start to do that because it's a game of practice, all right? It is very much a game of practice. So just come in, you do that. If you like that, or you evolve your line if you believe no, this is clearly not going down. This is actually relatively equal highs. This price is moving this way, and then you're going to start to see a lot of things when you start to do that. You're going to start to see a lot of things. Okay, you're going to start to see a lot of things. So just learn to practice that, and eventually you're going to see that when you start to do that, then your ability to spot what's happening in the market is going to become much easier. Your job is going to become easy because all you do is you use the most recent points. You could cut out this week, connect this point, and you're done. All right. And then there'll be areas like this where you can't connect points. And we're going to be talking about what is happening when you can't connect any major points like that. All right. So I hope you managed to understand how to use trend lines if you have a challenge of spotting where the market is going. But I'm sure by now you've made sense of how to draw trend lines. So let's see you in the next section where we're going to be talking about the nature's theory. Cheers.